Yeah, and I don't disagree. I think it does have a lot of power. I'm curious of your perspective on the banks. You mentioned the banks or the middlemen that kind of have the control and the power right now. What are your thoughts on that? And essentially, to your point, if it's P2P, I can send Bitcoin to you right now without any bank involved. I mean, how does that work though from a banking perspective? I feel like they're not going to give up easily. They're in a position of power and control, and they make a lot of money because of that, and they don't want to give it up. So, is that not a worry of yours, or is it just a matter of time, or do banks become integrated in this in the future? How is it going to work from your perspective, considering that there's traditional powers at play that aren't going to give up that power easily?
I mean, I think the evolution of bank, we have to understand how it became at the beginning. They were a custodian of assets who, because of the custodian, they will give you an interest because the banks will go and move around the money to make money themselves. But you can also go and request loans because they own your capital. So they have a position against they can make claims. You could go and mortgage because you could buy a house because you had a position of them and they knew all your assets to suddenly just becoming a only custodian. So the evolution of the bank was a retractment of what they was pursuing, which was kind of like I'm a generator of capital, I move capital, but then suddenly the retail started not having absolutely any of the qualities as to why the banks existed in the first time. Now, as a self bank or self promoter or something, you can have access to different kind of interests because you are the only asset owner. So you can play in a level not the same as the bank, but in a level that allows you to actually generate money on top of your money as your own custodian. So I don't think banks will be the enemy or anything. It's just that the custodian phase has faded. So they will have to reenact and create new investment opportunities to be able for me to allocate my capital to them to be at play. And we're starting to see all of these new interactions at bank where they're losing the custodian phase because also there's a lot of banks. Now interest rates is very ridiculous what they give you 0.1% even, and if you want a long term fixed rate, maybe 10% if you lock your money for 30 years, which is absolutely ridiculous. So I think just the fact that there's a new competitor, which is the self person or the self institution against them, they're going to have to create new products. And this is happening. They're starting to generate new products to attract capital, which has to be interest attractive. It doesn't have to be that I'm just giving you the money because you are the only entity where I can custody my money, because now I can custody my money. I can use my own money, and maybe that format of view is no longer necessary for me to trying to move around in the economic markets.
And you've mentioned this a couple times. Do you have any recommendations for people out there if you own your safely generate interest or loan it out? I know in 2021 it was kind of a crypto craze and there were a lot of platforms. So, hey, put your money in Anchor and you can earn 20%. And then that project goes bust
Yeah.
because it was tied to Luna or whatever it is. And then you lose everything. So I think you're right. It does present a lot of promise, but I feel like people can get in trouble if they're not careful. So do you have any recommendations, just considering your knowledge in the space, about a safer way to do that in 2024?
Yeah, right now, the space, obviously, like any other space, they had a lot of bad players. When there's opportunity, there's also opportunity for bad players to jump. So that's why we saw the Luna, the interactions that had to clean. I mean, it's still a new space. That's without a doubt. Now there are more audited firms about providing this. There's some institutional players that are licensed in the United States that can actually provide certain products that involve cryptocurrencies. So it is starting to get more regulated, but it's still very young. So a lot of people went into default with the big crashes. But if you assimilate when a bank crashes, yes, you do get a percentage of your money. For example, here in Europe, if you have 1 million in a bank, they can only insure you for 100K. So you do still lose 900K, but you don't lose that 100%, which is slightly better, but it's not that great of a solution, right? So when you ask me about this, now there's a lot of investment in treasury bills. So if you want to invest in treasury bills and you don't have access, you can do it through blockchain technology, where there are various providers who can give you a decent interest of 5 to 10%, which is very nice, steady, and it's backed by a treasury bill, which is audited by a firm, assuring that that treasury bill actually exists in the accounting books of the company. So we are moving to that threshold of really trying to understand where regulators can jump in, where auditors can jump in, because in the end, the foundation of everything is just trust. So, to back to your question, I'm not gonna provide any specific platform because maybe a lot of things wrong can happen, but nowadays education is more accessible, so you can read a lot about certain platforms that are performing exceptionally well, and then just try to allocate certain part of your portfolio, if you have a portfolio, into these new interesting financial instruments being created in the blockchain.
One other thing I want to talk about while we're kind of on this subject, I think you mentioned it, is that the blockchain allows a means of exchange with anybody in the world that has a cryptocurrency wallet without a bank involved. I think one of the issues with that is just the fluctuation in price most of the major cryptocurrencies experience. I mean, you could take Bitcoin, for example. So I don't know if you have an opinion or perspective on how that will work in the future. Is it more that we will adopt something along the lines of stable coins to then send money without banks involved, or do you feel that Bitcoin will be a means of exchange in the future where people are purchasing goods and services or sending Bitcoin between each other as a means of transferring money and value?
I think if we go to the offline version, gold is a store of value, and USD is the economic unitary value that it's moving markets across the globe, right? In this sense, Bitcoin is a store of value, and USDC or USDT, a stable coin, is the one that we transact with. Same thing. No, nobody receives gold, so I wouldn't even try to think about exchanging Bitcoin for my services because of the fluctuation. But against stables, then I'm all in for it. So everything that happens offline, we're just gonna mimic and optimize online. And I think we should not diverse from the like the Bitcoin gold. They are stores of value, or silver. Nobody gives you silver as a payment. So it's kind of like USD works, or the yen, or the euro, or whatever. And in the digital world, you have all of other things that can fluctuate, and they can be for trading, it can be for store of value, it can be for many things. But you also have the stable coins that can help you transact and interact without losing value on a transaction.
Makes sense. So, do you kind of you foresee a future where the fiat system and the blockchain and cryptocurrency kind of merge together? And like you said, there's a digital euro, there's a digital United States dollar, USDC obviously already exists. I'm sure there already is a euro stable coin. But is that what you foresee in the future? And it's kind of integrating into our current system with banks and everything. And then you have some of the other major coins behind it. Is that fair?
Yeah, absolutely. So I do think 100% is going to happen. There's already proof of concepts with the centralized bank digital currencies. There's various countries who have tested with their central bank authority issuing CBDCs because they want to know how the digitized money is going to work. Because right now they have a situation which is kind of like a private company just decided to create one of the biggest transactional value or monetary units, the stable coin. So the banks are losing authority against it, and they're like, we need to understand that some private companies are now becoming or holding treasuries that even or moving money more than some certain countries, and that's just insane. So how they're doing it now is we need to protect that power because we're still the governance and that central authority of a country. So we need to understand that the digital money is going to heavily fluctuate for the next couple of years, and we need to be involved. So they've been issuing CBDCs in Europe. There's a lot of different, even in the sandbox of different countries, testing CBDCs. Now there's certain private countries applying for a license of e-money in the European Union to create a legalized, compliant stable coin in Europe. So I think in the end, all money will be digitized. The matter is who you're going to trust or what money you're going to trust. The one created by the central authority via a CBDCs, or the one created by a compliant, audited private company, stable coin. And that's, I think, is going to be the dilemma for us as users to understand which one goes. And in the end, I think it's just a matter of, I would say, taste, but also accessibility. I think people will transact with the one that are more near to and easier to obtain. And then that's something that maybe governments are going to have to understand, that even if they create a CBDCs, maybe they won't be the one more used. So I think it's going to be a fight of powers in the coming years to understand which one becomes the widely mostly acceptable because we're talking about millions and millions and millions and millions and millions of transactions generating fees. So fees is the money denominator.
How do you reckon with that? So CBDCs seem to give even more power to central banks and governments, and it seems that the origins of cryptocurrency, as we mentioned earlier, is decentralization and power to the people. So how are those two things going to work? And do you have any hesitations of saying, okay, the European Union or the United States now has a digital currency and they can track, tax, monitor every single transaction and every single user using the service? I mean, what do you think about those implications of the technology as it progresses?
I think that nowadays it's even happening, and we're just throwing bombs knocks to the CBDCs because, for example, right now in Spain, if you deposit above, I don't remember, I think it's 500 euros, that gets triggered to the central bank of Spain saying there was been a deposit of fiat of 500 euros. So we already been in the supervision of every single being transacted. If I want to send a transaction via bank to bank above 1,000 euros, it already triggers an alarm saying I just moved 1,000 euros from my bank account to another bank account. So CBDCs is just the natural evolution of what is already happening. They want to know how we move our money, how we store, who we contact. It can be for AML, it can be for taxation, it can be for so many purposes that I don't think CBDCs will add anything else that it's already not happening. Maybe they will go for the cent, which is okay. Now we know where the cents are being moved. But right now, all countries are already heavily involved in monitoring money flows because AML compliance, all of these anti-money laundering for directives are being in place. But also, it is because bad players. I pay my taxes year to year. I don't have money. I declare everything. I believe I'm a good player. I like paying my taxes because it gives me here in Spain like access to free medics, to roads. I like the system. I but I understand that bad players they also want to take out. But bad players exist offline. They will exist online. They will exist on chain. So right now it's just evolution of governments trying to evade bad players for from them keep happening. So it's a weird autonomy.